Good evening, and welcome to AJP Markets. After a week of historic turmoil, the storm broke today, and it broke decisively. The Kospi surged nearly 5%. Foreign investors returned as buyers for the first time in about a month, and the buy-side sidecar was triggered at the open as markets across the region rallied on hopes that the Middle East conflict is ending. The single most important number today was not an index level. It was the direction of foreign money. For 24 straight trading days, foreign investors had pulled money out of Korea, a relentless exodus that drove last week's crash. Today, that reversed. On expectations that the United States and Iran are moving toward ending their war, oil prices eased and risk appetite came flooding back, and overseas buyers turned net positive on the Kospi for the first time since early May. All three markets rose, but each told its own version of the story. Korea rallied on the return of foreign money into its chip giants. Japan climbed on the same semiconductor names that have led all week. And China rose on something completely different, a powerful rally in industrial metals as peace hopes lifted expectations for global demand. One catalyst, three distinct engines. The Kospi closed at around 8,113, up nearly 5%, recovering most of the ground lost during the week's sell-off and pulling back only modestly from an even sharper morning surge that had briefly pushed gains past 7%. The defining feature was the flow. Foreign investors bought a net total in the trillions of won. Their first day of net buying in about 25 sessions, and institutions joined them, while individual investors sold into the rally. The buying concentrated in the memory chip names that had been sold hardest. Samsung Electronics jumped nearly 8% to around 322,501, roughly $212, decisively reclaiming the 300,001 level, while SK Hynix rose more than 2% to around 2.15 million won. The single most explosive move came from Hanmi Semiconductor, a maker of the bonding equipment used to produce high-bandwidth memory, which soared 24% to around 361,000 won. That tells you where conviction is strongest. Investors are not just buying the chip makers, they're buying the suppliers whose machines build the memory chips at the center of the artificial intelligence boom. After a week defined by fear, today was defined by the return of the buyers who had driven that fear. China rose today, but for an entirely different reason than its neighbors, and that makes it the most interesting market of the three. The Shanghai Composite closed at around 4,037, up more than 1%. But the leadership did not come from technology, it came from metals. With hopes for an end to the Middle East war lifting expectations for global industrial demand, China's mining and materials sector surged. Molybdenum producer Chindui Cheng Molybdenum rose the daily limit of 10%. The lead and zinc maker Yunnan Chihong Zinc and Germanium gained nearly 10%, and the copper producer Zhejiang Hailiang also rose close to 10%. This is a classic reflation trade. When investors believe a conflict is ending and the global economy will strengthen, they buy the raw materials that feed factories. While Korea and Japan chased their chip makers, Chinese investors were betting on copper, zinc, and molybdenum, a very different read on the same good news. The Nikkei 225 closed at around 66,058, up nearly 3%, and here the leadership was unmistakably the chip sector. The two single biggest drivers of the entire index were semiconductor names. Chip equipment maker Tokyo Electron rose nearly 8% to around 68,310 yen, and chip tester Advantest gained more than 8% to around 27,340 yen. Joining them was the memory maker Kioxia, which jumped more than 8%, directly mirroring the strength in Korea's Samsung and SK Hynix, and tying the two markets together through the memory chip story. The easing of Middle East tensions sent oil lower and lifted exactly the high-growth technology names that suffer most when energy costs and uncertainty rise. The Bank of Japan remains the background storyline, with a possible interest rate increase still expected later this month, but today that concern was completely overwhelmed by the global wave of risk appetite. After a week that delivered a crash, a record rebound, a geopolitical shock, and now a powerful recovery, the message of today was that the panic has broken. The foreign investors who fled Korea have started to come back, and the fear premium that built up around the Middle East is draining away. The Korean won strengthened to around 1,521 per dollar. The question now is durability. A single day of foreign buying ends a 2-4-day streak, but it does not yet make a trend. Whether this holds will depend on the ceasefire actually taking hold and on what Wall Street does tonight. That is where the region stands at the end of a remarkable week. If you found this useful, please subscribe to AJP for daily coverage of the markets that move Asia. Thank you for watching AJP.